Happy Monday, ladies and gentlemen, all in crypto here, and welcome back, guys, for another jam-packed daily market update. We have a very interesting one lined up for you. We're going to be kicking things off with an awakening that's taking place right now amongst the masses. We see Google searches for debasement explode to record levels over the last month. And of course, I would imagine that gold and what it's doing is spurring this on. But the great game of money is something that everybody should understand because it directly impacts your life. Whether you're into investing, finance, the financial world or not, you are at the behest of it. There was a man a while ago that was really the father of central banking or global banking that said, I care not who makes the laws in a country as long as I can control the money. And that is still very true today. And that's going to bring us very nicely on to where the central banks are today, where the Fed is. They're set to lower rates by 25 basis points on Wednesday. And they really are the great manipulator as the creator of money of everything. And we are very much expecting the Fed to ease, which should see a delayed business cycle play out. And actually, when I look at commodities and the fact that they're breaking out, we're going to look at Bloomberg's Aberdeen Commodity Index overlaid with a business cycle. We'll also show you what, when the Fed lower interest rates, what that typically promotes in regards to the business cycle. The context of 2026, I think, is going to be a good one for assets, as we're going to see a readjustment in regards to monetary policy. So a lot to get into. We'll also look at CoinShares' report. I'll be refreshing you guys on a Henry Ford quote about his workers and them not understanding money and why this is a tremendously good thing, because if they did, there'd be revolution by the morning. A lot to get into, and then we'll, of course, look at Bitcoin. This was interesting. This came across my desk this morning. It said, searching for the narrative. Public interest in debasement explodes higher over the last month. Just in, Google searches for dollar debasement hit their highest level in history this quarter as Bitcoin and gold both set new all-time highs. Dollar debasement trade is on. Now, the dollar can go one of two ways as far as the Dixie is concerned. It's either going to break out of that channel that it's been in since 2008 when crypto was perfectly introduced to us. And boy, oh boy, how successful has it been thus far? It's interesting that crypto was given to us as an alternative to the fiat financial systems. And in actual fact, it's doing more to enable them than not. And you have a system that is kind of coming to the realization that it's naked, using the emperor with no clothes as a reference, and a new system ready to rejuvenate it, to change it, to enable this global financial system being crypto. And that's one reason I'm so damn sure of its success. But this was interesting because there is an awakening taking place. And every single one of you, this is why this channel exists, should understand the monetary system. And the game is proliferation. If you are not keeping up with money proliferation, you're sliding down a greased pole. Through investing in the right vehicles, you can essentially put sand on your hands and climb up that pole and better not just your life. Don't do it for yourself. Do it for the people around you. Everybody should be an investor. And there's a reason the rich get rich and the poor get poorer. And that's because they invest. And we've seen a very interesting year. We've got this kind of K-shaped economy, which I'll also be talking to you guys a little bit about. I want to read you a quick Henry Ford quote. He says, "It is well that the people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning." That is a quote from Henry Ford, obviously the founder of Ford Motors. It's very interesting if you go down the Henry Ford rabbit hole. There was suggestions that they were using electric cars back then that were quite efficient, but of course there was a stop perhaps put to that. Anyway, I wanted to show that because there's an awakening taking place. Why is this relevant for me as an investor? Because we try and get ahead of the herd. If there's a mass awakening in regards to fiat and the game becomes, okay, everybody go into markets and that becomes a better store of wealth than your fiat. Certainly if the Fed's going to do what we think they're going to do, and that's continue to debase, which certainly commodities are suggesting in regards to higher inflation, business cycle perhaps playing out, breadth in markets taking place. We want to be ahead of that stampede. And it's not just me that wants to be ahead of that stampede, also you guys as well. This is a bit of my Monday morning ritual. CoinShares' digital report. They track all of the flows in regards to ETFs and ETPs globally. This is their volume 263. And there's really two stars here being XRP and Chainlink. And it's good to see that we're actually seeing inflows after some major outflows. Digital asset ETP's inflows at $760 million. As sentiment improves. Not entirely convinced. Bitcoin is still hanging in there. We'll see. It's very lackluster. I'd have expected a lot more. But then again, I think the economic conditions that we're under that are set to change, the markets are looking for more than a cosmetic change. They're looking for something more implied or implemented, are going to actually see 2026 be a very positive year. Certainly, I've got all the technical merit in the world for that. So digital asset ETP saw $716 million in inflows, lifting total AUM to $180 billion, though still well below the $264 billion all-time high. Inflows were broad-based, led by the US, of course. Germany, actually surprisingly, at 96.9 million, and Canada at 80 million. Interesting. Bitcoin attracted 352 million, while XRP, very interesting, saw $245 million, and Chainlink $52 million, a record inflow representing 54% of AUM. Also saw strong demand. Short Bitcoin products recorded significant outflows, hinting at easing negative sentiment. Consumer sentiment has been abysmal. There's this kind of K-shaped economy going on, I believe. There's a K-shaped crypto market. You've got Bitcoin around the narrative, and then you've got everything else. And if you're in the right altcoins, they're still elevated from their sort of bear market lows or cumulative lows, the altcoins that we're in. I still think that next leg is going to come, but it's going to have to come with more of a breadth in regards to the economy, the US economy, rather than just speculation. And actually, JP Morgan did suggest that crypto was more of a macro asset now. So very interesting. You can see this is XRP's inflows. Smashed Ethereum, smashed multi-asset, smashed Solana, smashed Litecoin, Sui, Zcash, everything. And wasn't that far off Bitcoin. Really very, very impressive. Chainlink, another real winner here. Actually beating Ethereum. I think this is because you do have the ETFs out. Of course, the US-led, which is very atypical. They also gave their, just quickly, CoinShares 2026 outlook. You can see key takeaways for 2026. We'll just fly by these as a little bit of insight before we get into some macro-y stuff and related to the cryptocurrency space. And we'll look at commodities and what that's suggestive of. Key takeaways for 2026. Crypto is normalizing into the real economy. Hybrid finance is visible in stablecoins, tokenized funds, institutional pilots, and revenue-generating apps. This is really where I'm focused in regards to being an investor right now, is this sector. I've got some real winners, I think, in regards to the stablecoin play. Bitcoin's mainstreaming continues structurally. ETFs and options have deepened liquidity and improved price discovery, while policy and accounting changes keep lowering frictions for corporations and institutions. Traditional adoption is still early, but the direction is set. Stablecoins are shifting from crypto liquidity to global payment rails. Very interesting. And by crypto liquidity, you're talking about, your pairs. Actually, Tether, I did speak to an individual that works with one of the central banks, and he was saying that Tether's being used as kind of what XRP was designed to do, which is be on-demand liquidity in regards to facilitating global remittances, which is an interesting one, perhaps for another video. Regulation is giving stablecoins a clear green light. Corporates are preparing real workflows, and the value redistribution across payments, banking, marketplaces, and cross-border settlement becomes a defining theme of 2026. Tokenization is scaling fast, led by yield-bearing real-world assets. Repos and treasuries remain the clearest growth vector, with issuance spreading across multiple chains and traditional asset managers, moving from experiments to durable product lines. Markets are rewarding fundamentals again, on-chain applications with explicit value accrual. Buybacks, burns, and fee sharings are turning into KENs, into cash flow linked instruments. This is reshaping how investors price alt risk. Very interesting. I think it was Aave. I've become very bullish on DeFi again. It was Aave that are actually doing their buyback, and we got news on that just the other day. So, some interesting stuff I wanted to share with you. Let's talk about what the Fed's set to do on Wednesday and the great macro thing happening right now. The Fed is set to cut interest rates by 25 basis points. I think it's not enough. There was rumors on Twitter that the Fed is also set to buy back, I think it's $45 billion, or add to the repo markets $45 billion. It's not enough. There needs to be QE at a bigger scale, and there needs to be more rate cuts for markets to get going. There's a limbo that they're in. We've had a K-shaped economy. You've seen the S&P do well. You've seen markets go in the direction that we predicted. Let's be clear on that. We got that very right. The context of them getting there or doing that wasn't quite what we expected. We expected more of a breadth, more of a uplift across the board. It's been very concentrated in AI and tech. You can get that from CapEx. You can get that from a number of things, and probably CapEx-led, I would say. And actually, as far as crypto is concerned, it's really been Bitcoin and a couple of alts that have done well. A lot of our alts are still very elevated. But I think generally, if you look at small to medium enterprises, if you look at small to medium cap stocks, they've kind of not done well. And it's due to what the Federal Reserve has been thrusting upon people, which is interest rates where they're at, the highest level since the dot-com crash. Arguably, there's more of an effect on interest rates now because there's a bigger velocity of money. And also, you've had the tightest quantitative cycle in regards to QT that we've ever seen. Undoubtedly, this was going to have, and I should have known this, more of an effect on assets broadly than we've seen. So we've seen almost like a rolling recession for 3 years as a result of this, for a lot of things. But despite that, markets have rallied because it's been concentrated in the tech sector. So they are set to lower interest rates. I did this with my patrons in a lot more detail. Every time they lower interest rates, it spurs on the PMI business cycle. You can go and look at this for yourself. We've got interest rates in blue. We've got the PMIs in black. We haven't had a PMI cycle, and it's been due to interest rates and where they're at. Now, with them lowering it should spur it on. That should spur on assets, as there's a correlation there. And I think actually commodities are potentially a lead indicator of this. This is Aberdeen's Bloomberg All Commodity K1 strategy. This is what we would look at as phase one, now into phase two, which is an uptrend. And if we add the US PMIs on here, you can see what it is we're looking at. So commodities going up is a broad barometer for what we're expecting for assets more broadly. And we know, based on the fact that the S&P had a technical bear market earlier this year, being a 20% plus pullback, every time you've come out of that and you've come out of the hole, you've embarked on a uptrend for the smallest period being nearly 400 days that led into March 2020. That takes you into mid next year. We think that's certainly the projection for the S&P. The Russell's about to break into, or is breaking into, new all-time highs. We've got higher targets for that. From a macro perspective, we're very bullish. All eyes really are on the Federal Reserve. And I do still think Bitcoin's in an uptrend until proven otherwise. I think the bear market callers are premature. Look, if I believe we're going into a bear market, I will say it. I don't believe that to be the case today. It doesn't pay me to be wrong. It pays me to be right. So far, we've got the general direction of markets spot on. We've made money in the altcoin sector despite everything that's gone on, and certainly the stock sector. We've got screamers in regards to miners that are now becoming AI plays. Even quantum computing we've been looking into, and there needs to be more look into that. Again, signals a shift coming in the world, perhaps. Yeah, I'm happy with how we're positioned. Certainly, if we think what's to play out is, I think the bear market callers are going to be wrong again. And I think there's a real fatigue with the markets. I think that's everything to do with the business cycles and this K-shaped economy and so on and so forth. You know, there's a real concentration in markets, hopefully with what the Fed is likely going to do. We're going to see that breadth, but we need to see it, to be honest, or at least to get a concrete signal. We need more than a cosmetic pivot. That's it from me, guys. I'm going to love and leave you. Have a fantastic Monday, and I'll see you all in tomorrow's Daily Market Update.